Hi guys, just wanted to do a quick sort of training video. It's a euro pound on an hourly chart. I don't want to trade hourly charts. I prefer to swing trade the high time frames. However, just from a pattern perspective, I just thought I'd do it to show you just another example. You can never see enough examples in my opinion, so that you get to understand all the different types of mental representations of how these things can look. So you've got a very well defined little level here. If we continue on into the future, that would have been pretty tempting to take that trade if you were a level trader at support. Candles not able to close near the lows, and then you pretty much get a perfect rejection of that area. As it touches, it's almost perfect. It's just slightly off from that level, but it's perfect to that rejection. And if you were a support resistance trader, that would probably be enough for you to pull the trigger and take a long, and you'd place your stop below this structure. So this is how you would be looking at it and seeing it in real time at the hard right edge. No sooner do you go in, it gives you some profit. And there's some retracement traders in these wicks also coming in, so it's a better version of entry cheese, just because it's not just the level trader, you got some retracement traders going in as well, and it's very challenging for them where to place their stops, so they would also most likely go below that structure too. Granted, it's not the world's greatest retracement, but it is there. And then boom, oh dear, they all get stopped out. Breakout traders take shorts. You would expect retracement traders to trade the break pullback, so now the mental rep from here would be a pullback into that level and some type of sell-off. The idea being prior support becoming future resistance, so some type of sell-off in here. Who knows what that will look like, but again, doesn't matter, we're just watching and observing. Boom, right, imagine that in real time. That would have been very, very negative. So if I just change this color to red, but my candles are black, but you get the idea. Look how negative that would have looked in real time. Okay, and it also breaks the low of that prior low, and in the context of all of these moves down, lower lows, lower highs, lower lows, lower highs. Look at this, it's all pretty symmetrical, and those traders would love a bit of that in real time. These guys and girls would place their stops above this swing. Boom, they get nailed, and that's really pretty much the reason why you get quite a sharp move up through there, because those traders who had their stops above there, those stops are being triggered, and if you're a seller, those are buy orders firing, and you're getting people bailing out of those positions manually, you're getting their stops triggered, etc, etc, so it drags it up through the level. The selling in that candle might have been a little bit of cause for concern, but this is the perfect entry, where you get a negative candle that can't possibly close near its lows, and then it's followed by an engulfing candle closing at its highs. So every time we're sort of looking at this phase of the process. So you've got the level, number one, the entry cheese, number two, the manipulation, number three, and then essentially looking for the entry after the manipulation has occurred. You know, that's a great entry, although we don't know that ahead of time. Wait for a candle to break that high and pull the trigger and go in. So that would be a decent entry if you were trading this lower time frame. I'm not, but I just thought I would show you the level just from a training perspective. It's, as I say, it's never a bad thing to have as many of these sort of scenarios in your locker, so that each time you see them, you become more used to them, and how to interpret them with ease. So hope that helps, guys. Take care.